to the last keynote and the final keynote presentation of our first session. We have the proud privilege of having with us Dr. Seetharaman. He is the CEO Doha Bank Qatar and is going to be presenting on the Qatar Banking Growth 2020, reflecting on Qatari's economic resilience. Over to you, sir, for your keynote presentation.
Interesting world we are in, and the Qatar Trade Summit, second Trade Summit, has come at a time when we are at a defining moment. In the last 1 month, we have seen global governance in terms of APEC, RCEP, G20 yesterday, again, BRIC meetings, are all focusing on sustainable development goals to global economics. In terms of sustenance, how do we come out of the Great Recession, and how do we map the contingencies to have a sustainable value chain so that humanity is not disturbed beyond definition? We live in an interconnected, interdependent world. We have reasons to believe the impact which we are witnessing today, over 59 million people, loss of 1.4 million people again, has got a profound impact in our reorganization of the world. In terms of trade, in terms of investments, in terms of banking and finance, what we need to articulate is humanity enduring its value, elimination of extreme poverty, bringing gender equality, universal healthcare, universal education, global warming and climate change, trust and transparency in terms of truth in action, justice, institutions which are bringing those disciplines, convergence of politics and economics, global warming and climate change through digital diversity. In short, the global governance itself is going through huge convergence of politics and economics. That's the reflection we are seeing. Unless we create a better world and better citizenship to this world, the rest of the components are insignificant. And that's what the collective vision and shared mission. When we recognize this crisis is of greater significance, we have to understand the impact is quite devastating in terms of economics, environment, and human. It means we have to recognize all the challenges in all these four spectrums conceptually. In terms of economics, we have to bring in the liquidity support. The liquidity crisis should not move into a solvency issue, perhaps sovereign issue. That is precisely the reason over 30 trillion has been pumped over the last 8 to 9 months, and making sure the dexterity and capacity of individual or institutions is not unduly impacted. The remedial management which we need from the disaster to sustainable value creation is going to be profound in terms of overall existence. The monetary policy which come from the technocrats, central bankers, the fiscal policy which come from the politicians and the governments have to converge to make sure we pump in additional money in the system so that subsistence is not endangered, its solvency. That is precisely the reason globally 195 countries were pumping extraordinary amount of liquidity. The liquidity and monetary policy alignment with the fiscal framework has worked. Definitely it has worked. We have seen the recent IMF projection from a global contraction of nearly 4.4% to, again, 5.5% in aggregate terms. Global economic momentum for 2021 has been the indication. Advanced economies are grossly underperformed, and possibly they will recover to positive territory next year. The emerging markets, so-called developing economies, again, has to face the downturn, the contraction, whether it is India or Brazil or Russia, except China. China had a marginal growth, upturn of nearly 1.8%. And again, the rest of the world in gross term could not produce more. That's on the global economics. Qatar itself has gone through contraction of nearly 4.5%, and GDP has regressed to $148 billion. With a very small current account deficit of less than $1 billion. When it comes to gross debt to GDP, around 68%. It'll bounce back next year with the economic momentum of 2.5% growth, reaching the productivity to $155 to $156 billion, taking oil at $45. The bigger value chain comes out of the hydrocarbon momentum which we are building up. When the economic sustenance is there, the banking system operates effectively. The trade operates effectively. The value stream and value chain across multilateral trade operates effectively. And that's precisely Qatar's story is all about, a country of great substance, substantive compliance in global terms. While the decision to reignite the remedial management and make sure sustainability is the real order, the challenge still remaining, how do we redefine the business model? How do we make sure the rationalization in global terms operating in terms of unemployment or job losses? How do we ensure we have social protection to the job? How do we make sure the digital governance, which is going to redefine the scope and performance of the individuals as well as institutions, is going to change the hybrid framework? And how we are going to make sure human existence with a purpose is getting valued with absolute dignity. And that's what everyone is engaged in, and every country is engaged in. Qatar's governance to human governance in this pandemic is simply very conscious in substance. We have lost nearly 235 people. We had an impact of almost 145,000 people. The first thing Qatar did is to pump 75 billion Qatar riyals in ensuring the blue collars are protected in substance. The demographic dynamics, if you look at it, the expatriate populations plays a big role. You have to ensure the blue collars for expatriates, predominantly a labor class, working in hydrocarbon or non-hydrocarbon productivity, their salaries are ensured, their remittances are going to their beneficial pockets, and that is precisely the regulators have done, the central bank has done, making sure instantaneously the money gets transported to the beneficiaries. There is a special promulgation to ensure the money transfer is done instantly and employers making the wage payments. That's the primary substance. The banks have been asked to clearly focus on ensuring which will be the affected sectors. Most of them have been affected, whether it is contracting or trading or manufacturing, services, which will be the sector. Huge amount of expatriate labor force. They need to be protected, and their solvency is important for long-term sustenance for their family as well as the economic development of this country, which is engaged in huge amount of ambitious plans in terms of both hydrocarbon as well as non-hydrocarbon. So Qatar Development Bank National Guarantee Program, that was a major pronouncement by which the wage is protected, wage is reimbursed, and again, wage protection system has been promulgated. The rent and taxes are all reimbursed with a substantive grace period, and the repayment period will be up to 3 years with absolutely a concessional interest. That's nothing but just a cost of fund. That's the major pronouncement. When it comes to ensuring liquidity, the banks have been asked to make sure proactively put a sovereign support, that is regulator support, central bank support, to see that affected sectors again from the private sector side, not the government side. Government has got enough resources. Private sector side, the central bank has made sure the loan installments have been postponed, the interest has been postponed, and making sure the charges, the fees, the commissions, the commitment charges, which generally the financial institution charges on the corporate or the small and medium-sized entrepreneurs are waived. Or when it comes to individuals, the point of sale payment charges or credit card charges are all waived. So the idea is to make sure we don't pinch the pockets of downtrodden. We have to necessarily make sure the debt servicing capacity of individual or institutions are fully protected. And that is precisely the promulgation which has improved the overall liquidity. We have had an extraordinary experience in the blockade time. In 2017, June, when the blockade started, Qatar's reserves were depleting because they used the external assets as well as internal reserves, central bank reserves, to make sure the liquidity was pumped regularly so that even if there are extraordinary remittances, the country's liquidity will be the sustenance. And that is precisely the model has worked extremely well. And that has been replicated again. If you look at it, the external assets as well as central bank liquidity put together, twice of the GDP. It means you don't have a real threat to your solvency, whatever be the stagnation in the production or distribution of oil or gas or petrochemicals. And that is the economic strength, underlying economic fundamentals are strong. That's why Qatar is a double-A-rated country and banks are. If you look at the economic momentum in the last 9 months, the total credit expansion is nearly 6.8%. The deposit expansion is nearly 3.6%. Trade has grown by nearly 12%. Services have grown by 12.8%. Contract financing has improved by 10%. Retail, consumer retailing has grown by nearly 4.7%. Real estate has grown by 4.7%. That indicates the overall economic momentum. And that's precisely we need to understand. Qatar's sustainability is reassured in terms of substance. Now, when it comes to banking spectrum, all the sectors which I mentioned, whether it's manufacturing or trade or treasury, is a subset of the overall economic momentum. Qatar has promulgated last year real estate regulations where expatriates can buy. That is again reinvigorated by relaxation of the framework. If you have $1 million, you can have a permanent residency. And even $200,000 without additional advantage, you can have a residency. So that has helped for stability in terms of real estate. There were corrections, but it is not a collapse, unlike our neighbors. So we have seen real estate getting stable and functional. Now, when it comes to a free zone, Mr. Abdullah has mentioned, even Qatar economic value advantage was well summarized by Sheikh Al-Noor. I'm not going to elucidate further. But the fact remains, the regulatory alignment, including public-private partnership model, which was pronounced this year, May 31st, His Highness Emir of Qatar has pronounced a public-private partnership to handhold the private sector. The government will give sufficient support in terms of liquidity, market access, technology, or infrastructure provisions. That's been the promulgation. And that's a partnership. Banking as a spectrum, if you look at it, every single local bank, the government of Qatar, that through its agency, Qatar Investment Authority, owns 16.6%. And that's where the proactive support comes in terms of the framework. That gives an absolute confidence to global investors. When it comes to debt issuance this year, Qatar government sovereign has issued over $10 billion, which was 5 times oversubscribed. The banks collectively has borrowed nearly $15.4 billion. That's again extremely well responded with cheap funding from the global network. So the liquidity has been fixed up very nicely. When it comes to capital adequacy, the total capital adequacy framework defined by the Basel framework has been with a good safety margin, over 16.5% has been the total capital adequacy. CET, the core equity, has been well-founded. When it comes to Tier 1 capital, again, the banks are well conserving its resources in spite of the credit creation of nearly 6.8%, as I mentioned. So the capital adequacy is strong. When it comes to profitability, there is an absolute reduction. That's a world reflection. And again, when there is economy is contracting, when there are concessional advantage given to passed on to individuals, it's bound to happen. Every institution, including Doha Bank, we had a regression of 5% in terms of profitability compared to the previous year. But what's more important is the highlight of what is yet to come. In terms of financial stability, we have a hydrocarbon momentum from 77 to 127 million metric ton. That's going to be a major opportunity for banks to finance for downstream industries or hydrocarbon industries. We have long-term diversification distribution in terms of production and distribution of LNG across the globe with the change in phase of the world. In terms of energy mix, that's going to be a value advantage for local banks and financial institutions. That's a major development. The non-hydrocarbon, airport, seaport, road, rail, there are 20-odd projects which are going to drive the overall economic reflections in terms of modernization. That's going to create additional opportunity for contract financing or real estate or, again, the overall infrastructure creation. And that's going to be a major value advantage. We are seeing already double-digit growth, as I mentioned, treasury or trade. With the change in phase of the trade alignment, there's a huge disruption in terms of trade in the current context, whether merchandise or services. That's because of the contentious issues between very many countries, whether it's China or US, or between the developed world and developing world. Now, to harmonize these relationship in terms of policies and procedures and process will reignite the momentum. The digital governance will reignite the business model. You have huge reorganization is going to take place, and we are all in a position to support the multilateral trading systems. And that's going to be augmented by ultimate social media tools and value advantage in terms of digital opportunities, including blockchain. So huge amount of opportunity exists. Qatar is going to invest on the fintech to reignite the digital governance. Technology and banking convergence is coming up in the coming days. So the trade is going. Last year alone, we have done over 100 billion, 80% to Asia. The trade has shown enormous amount of market opportunities with the new market, new players, new cost structures. I'm sure Qatar banking system has been well-founded to create value advantage as a very strong, financially stable, fundamental to the economy. And that is what the status of the banking system is all about. Economic resilience, economic sustainability, Qatar's convergence in terms of politics, economics, and social governance will be a value advantage for banking systems for us to see through. We create a country of great substance for generations to come so that we can be a part of the better human endeavors. Thank you, ladies and gentlemen, for your kind attention.